Monday was not the main event. Monday was the trap. The market makers spent the entire day painting a picture of weakness. They pushed the price down, they stalled the rally, and they bored you to death with sideways chop. Why? Because they know human psychology better than you know yourself. They know that after a weekend of fear and shutdown rumors, you are jittery. You are looking for a reason to exit. So they gave you a boring red Monday to make you think the momentum is dead. But here is the truth that the charts won. To tell you, unless you know where to look, they were buying everything you sold. Welcome back to the Prosper Path, the channel they couldn't kill. And today, I'm going to show you why Tuesday is set up to be bigger, more violent, and more profitable than anything we saw last week. We are looking at a classic spring load setup. While the spot price of silver was drifting lower on Monday, the volume-weighted average price of VWAP was actually climbing. This is a massive divergence. It means that while the displayed price was dropping, the real money was buying aggressively at the bid. The whales were absorbing the selling pressure without letting the price spike. They were filling their bags before the explosion. And why are they loading up right now? Because of what happens tomorrow morning. Tuesday isn't just another day on the calendar. Tuesday marks the collision of three critical factors: the T+1 settlement cycle from Friday's options expiry, the release of the new CPI inflation data, and a critical technical breakout on the 4-hour chart. If you sold today, you fell for the trap. You handed your wealth over to the very people we are fighting against. But if you held, if you had the diamond hands to sit through the chop, then you are positioned for what I believe will be a vertical move tomorrow. The algorithms are currently positioned net short, expecting a breakdown. But the physical market is tighter than it has been in 40 years. When the market opens on Tuesday, if we break just one key level, those algorithms will be forced to flip long. And when they do, the squeeze won't be polite. It will be violent. Let's dig into the mechanics of this trap, because if you don't understand the plumbing of the financial system, you are just gambling. And we don't gamble on the Prosper Path. We execute. Why was Monday so strangely quiet? Why did the price of silver consolidate in a tight range despite the massive news cycle? Because the bullion banks were desperate to survive the T+1 settlement cycle. Here's the technical reality that the mainstream financial news will never explain to you. Last Friday was a massive options expiry date. Billions of dollars in paper silver contracts expired. Under the new settlement rules that the SEC implemented to modernize the markets, these trades must settle in one business day. That means the physical delivery obligations for those Friday contracts hit the ledger on Tuesday morning. Do you see the setup now? The banks spent all of Monday frantically trying to cap the price. They had to keep silver below critical resistance levels to minimize the cash they have to pay out on Tuesday. They used spoofing, placing massive sell orders they never intend to execute, to scare you out of your position. They needed your silver to cover their obligations. If you sold on Monday, you didn't just lose a trade, you provided the exit liquidity that saved a naked short from defaulting. You literally handed them the life raft they needed to survive until Tuesday. But here is where the math turns against them. Tomorrow morning, not only do these settlement obligations hit, but we also get the release of the new CPI inflation data. Now, we all know the official CPI number is a lie. It is a massaged, manipulated statistic designed to hide the fact that your grocery bill has doubled. But in the world of algorithmic trading, the truth doesn't matter. The reaction does. The market is pricing in a hot inflation print. The energy costs are up. The supply chains are broken. The cost of services is skyrocketing. If the CPI data comes in hotter than expected tomorrow morning, the algorithms that control trillions of dollars in hedge fund capital will instantly switch into inflation hedge mode. What is the number one historical hedge against inflation? It isn't Bitcoin, and it certainly isn't the US dollar. It is silver. So on Tuesday, you have a collision of two massive forces. The forced settlement, banks needing to buy physical metal to satisfy Friday's expired contracts. The inflation panic, algorithms buying paper silver to hedge against the dying dollar. This is the definition of a liquidity squeeze. On Monday, there was no buying pressure because everyone was waiting. The volume was low, the order book was thin, but on Tuesday, both of these massive buying waves are going to hit the market at the exact same time. And because the order book is so thin, because nobody is selling real physical silver at these prices, that buying pressure is going to hit a vacuum. When billions of dollars of demand hit a market with zero supply, price doesn't just go up, it gaps up. That means the price jumps from $28 to $30 without trading at 29s. It skips levels entirely. Monday was the suppression to prepare for the settlement. Tuesday is the explosion when the settlement actually happens. The banks know this. That is why they tried to bore you to death today. They wanted you asleep at the wheel so they could front-run the Tuesday move. They are counting on you being tired. They are counting on you thinking silver is dead money. Do not give them that satisfaction. The T+1 settlement is a mathematical certainty. The inflation data is a catalyst. And the combination of the two creates a setup that is statistically bigger than anything we saw on Monday. If you thought Monday was boring, you don't understand how energy builds in a market. Monday wasn't dead. Monday was a volatility contraction. Look at the 4-hour chart. Do you see how the highs are getting lower and the lows are getting higher? The price is being squeezed into a tighter and tighter range. We call this a coil. It is like compressing a spring until it has nowhere left to go but out. While the retail traders were logging off because nothing was happening, the whales were leaving their footprints all over the tape. I tracked the dark pool data, the private exchanges where the institutions trade so they don't move the market price. And guess what I saw all day Monday? Massive block buys. Millions of ounces were bought in the dark pools at the exact same price level over and over again. They were accumulating quietly while the public market slept. They were absorbing every single contract you sold. Why would the smartest money in the room buy millions of ounces on a boring Monday? Because they know the coil is about to break. Here's the setup for Tuesday morning. The Bollinger Bands on the daily chart have tightened to a level we haven't seen in 6 months. When the bands get this tight, a violent move is statistically guaranteed. It is not a matter of if, it is a matter of when. And with the CPI catalyst hitting tomorrow, the when is Tuesday open. If we break above the upper resistance band in the first hour of trading, the algorithms will trigger a momentum buy signal. This will force the shorts, who are currently betting on a crash, to cover their positions instantly. This creates a chain reaction. The shorts buy to cover, which pushes the price up. The higher price triggers more algo buys, which pushes the price higher. This is exactly what the whales positioned for on Monday. They bought the quiet dip so they could sell into the violent rip on Tuesday. The relative strength index, RSI, has reset. The MACD is curling up for a bullish cross. The technicals are screaming that the energy has been stored, not lost. Monday was the day they loaded the gun. Tuesday is the day they pull the trigger. If you are holding physical, sleep like a baby. But if you are trading paper, you better be awake at 8:30 a.m. sharp, because once this coil breaks, there is no catching the train. You are either on board or you are left behind. So here's the bottom line. Monday was the test. Tuesday is the grade. We have looked at the T+1 settlement cycle. We have analyzed the inflation data catalyst. We have dissected the technical coil on the 4-hour chart. The data is irrefutable. The banks spent Monday trying to bore you into submission because they need your silver to survive Tuesday. Do not give it to them. The setup for Tuesday morning is binary. There is no middle ground. Scenario A, the CPI data comes in hot, the dark pool buying is revealed, and we blast through those resistance levels like they aren't even there. The shorts get squeezed, the algo bots flip long, and we see a $2 to $3 vertical move in a single session. This is the base case. This is what the smart money is positioned for. Scenario B, they try one last desperate flush at the open to shake out the weak hands before the rip. They might push price down $0.50 just to trigger your stop losses. Do not fall for the flush. If you see red at 8:30 a.m., do not panic. That is the bear trap. That is the final attempt to steal your wealth before the repricing event. The relative strength index is too low for a sustained crash. The open interest is too high for them to escape without covering. The math is on our side. The physics of the market are on our side. Here is your battle plan for Tuesday. If you are a trader, watch the opening range breakout, ORB. If we break the high of the first 15 minutes, you go long and you don't look back. The momentum will carry us for the rest of the day. If you are a stacker, turn off your screen. Seriously, go for a walk. Play with your kids. Do not let the digital illusions on a screen convince you that your physical asset has lost value. An ounce of silver in your hand is the same ounce whether the screen says $28 or $280. The only thing changing is the dying currency it is measured in. Monday was designed to make you doubt. Tuesday is designed to reward your conviction. We are witnessing the greatest wealth transfer in human history, and it is happening right now, candle by candle. The people who sold on Monday will regret it for the rest of their lives. The people who hold through Tuesday will tell their grandchildren about this day. Do not let the boredom fool you. Do not let the silence trick you. The coil is wound tight. The fuse is lit. And the explosion is scheduled for tomorrow morning. If this analysis gave you the steel spine you needed to hold the line today, then hit that subscribe button. Join the Prosper Path. We are the only channel that tells you what the banks are doing before they do it. And I want to know who is ready for the fireworks. Drop a comment below with Tuesday is ours. If you are holding your position, no matter what the opening bell brings, let the tourists panic. The wolves are eating. Stay liquid. Stay dangerous. And I will see you on the other side of the breakout.